I'm not going to say all of this money is going into crypto, but quite a lot of it will end up in crypto, and a huge amount of it is going to end up in tokenized digital assets.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. In today's video breakdown, we're going to be diving into some perspectives from some of the world's largest institutions, industry-leading experts in the crypto and digital asset ecosystem to prove to you guys that this most recent pullback that we are currently witnessing and experiencing in the crypto ecosystem is nothing to be concerned about, and instead, at least in my personal opinion, should be seen as a massive opportunity to enter into this digital asset landscape at discounted prices. Now, none of this is financial advice, but hopefully after today's video breakdown, you guys will have such a better long-term perspective, gathering insights from some of these large institutions and industry-leading experts who will really truly set the tone for the remainder of 2025 and beyond. So if you guys enjoy these types of video breakdowns, do me a favor, smash that thumbs up button and subscribe. Always keeping it real with you guys, educating you all and giving you proper information. No bullish moonboy hype or hopium. We were one of the only communities on the face of the internet warning you guys that a pullback was imminent for specific fundamental reasons, looking at the total cryptocurrency landscape as a whole and zooming out, which we will also go into detail in today's video breakdown. So I want to start here with this post that I put out to you guys on X, because this is going to be our foundation for today's video breakdown, where I said to you all, the crypto recovery will be nothing short of epic. Wealth is built when capital is deployed at discounted prices, not when everyone is chasing pumps and hype. This current pullback was inevitable. Some heeded the warnings, others didn't, but now that we are here, the real question is, how will you respond? What will differentiate the successful people from the rest is how you react in moments like this. I want you guys to take a second and listen. Remember, here at CYPRX, we pay attention to key vocabulary. We have two representatives that play a role amongst large institutions using the same vocabulary that eventually everyone will make the switch to blockchain and digital assets, and that is a no-brainer, and that investing in this space is also a no-brainer. Take a second and listen to what they say.
With liquidity that works 24/7, you can make changes to your clients' portfolios and allocation models on a Sunday night and do hedging in real time. And so, I mean, at that point, it's just a no-brainer. Everybody's going to switch. So it's not that
The issue right now is we have no fixed income market. We have no treasury. So if you think of how you run a treasury department in a bank or a fund, we're really hamstrung. We can't actually find manageable yield within Bitcoin. So I think what Nikita and I do in our businesses is try to provide a yield on Bitcoin. And that's going to be a small portion of the Bitcoin hold strategy, but it's an important part. If people want to have, you know, a decent chunk of their personal wealth or their fund wealth within an asset, to be able to make yield on it is important. And so I think that's where we're doing work. So I think that combined with more safety and custody, more regulation, I think it's a no-brainer that this will continue to grow. And
I mean, at that point, it's just a no-brainer. Everybody's going to switch. So it's not that
it's a no-brainer that this asset class will continue to grow. The other gentlemen, again, both industry-leading experts and representatives that deal with large financial institutions, also said that it's a no-brainer that eventually everybody will switch. So back to this fundamental piece to, again, confirm that what will determine your success is how you act in market pullbacks right now, how you respond to these current market conditions. Are you fearful? Do you now think crypto's a scam because you were uneducated and not understood why the market was possibly going to pull back at the end of last year in 2024, which again, we cover for you guys here at CYPRX. Hopefully you guys have been paying attention to the education that we've been providing, because none of our followers should be confused as to why this most recent pullback happened, which we will cover. So let's continue with this piece. Let's be clear, crypto is not retreating because the technology or infrastructure is failing. In fact, the last 6 to 8 months have seen more positive advancements in the crypto space than in the past 5 years combined. Don't take that from me. Take that from, again, industry-leading experts that deal directly with large financial institutions, telling you guys that the infrastructure is being built out, the infrastructure is ready, it's more mature, and that financial institutions are 110% laying the foundation to to onboard into this space.
It also tells you is that we're out of the early stages. And so that means that folks are starting to give up this notion that this is some sort of gimmick. It is real. And if it is real, then again, we have a long way to go before this becomes, more mainstream. What it also tells you is that the mature users, not the early adopters, they wait until the risk of adopting is significantly reduced. So they will expect mature, known, transparent market infrastructure before they come online. And the good news is that's exactly what's happening and what a lot of folks are building towards.
There is the ability to have better risk controls, more transparency, and better execution on-chain than what we see in centralized infrastructure. The problems that the space has been ostracized for over the years, FTX going back to Mt. Gox, those aren't crypto problems. Those are just corporate frauds. Crypto solves those problems, right? And so if you're willing to be at the vanguard, deep down the rabbit hole, in the weeds, in DeFi, on-chain, and go through the work of doing everything on-chain, it offers just superior risk-adjusted returns.
So you think that the DeFi infrastructure right now is strong enough, resilient enough to attract real institutional capital?
Yep.
It's a heavy dependency. I mean, to the point where actually, like from Copper's standpoint, when we're thinking about hiring executives, we like thinking about who's going to win the elections. It's like, it's which is a little bit strange, but from the larger players standpoint, and I'm talking about your tier 1, tier 2 banks coming in and providing this infrastructure. I think this will unlock massive amount of other assets and players entering into the space.
We think the potential is huge. I mean, we've been at this game now for about 10 years. There's been a lack of a unifying organization, a center of gravity, if you will, to bring the industry all together. And that's where DTCC comes into this process. So we are looking at a multifaceted approach to try to bring the industry together. One, by rolling out the products that Dan and his team are building. So that is really looking at the entire life cycle of tokenization. So it's really the entire life cycle where Dan and the team have done some amazing things. And he always talks about its compliance first, which is really important in our industry and also as part of DTCC, right? We look after the safety and soundness of the markets, and we intend to do that as we move forward with digital infrastructure. The second component is really creating environments where we can finally move away from these individual one-offs, proof of concepts, and start to move into production. And then the third component is working, again, with the industry and the fintech providers out there to build what's called a tier 1 setup, which is resilient.
Talking about your tier 1, tier 2 banks coming in and providing this infrastructure.
But the whole idea is to really do for digital assets what we do for traditional assets and have a resilient, scalable, and interoperable environment. So that is what we're striving to do. We want to be the digital financial markets of the future, and that is the strategy that we're pushing forward on.
It's a huge issue right now. We have two sides of this coin. So you have the choke point in the US. So I think there's been a collective regulatory strategy that's sort of been unofficial to stop banking crypto firms. That's changing. As of last week, the Fed's on the record for saying that banks should come and be positive for crypto companies. So that's a huge win for the industry. The flip side is that there's very little balance sheet in the industry to be able to provide margin lending for crypto firms. So our best guess is there's about $6 billion of PB balance sheet globally. That's nothing in the scheme of things, right? So if you're looking to get leverage and run, leverage trades, it's a very sort of small amount to support a crypto hedge fund industry. So our goal is to engage with the TradFi tier 1, tier 2 banks and bring them in. And so I'm actually here today for this conference. It's great. I'm spending the rest of the week meeting with the banks to try to encourage them and get them comfortable that the next 12 to 18 months, they can start coming in and providing balance sheet.
Scale, like you need to have a lot of people in the team, a lot of infrastructure to support and to be able to essentially attract that institutional capital that's actually starting gradually to come into the space.
So I just played over like 6 video breakdowns of industry leading experts that deal directly with, if or not, institutional, individuals themselves, that the foundation is being laid for financial institutions to onboard into this space over the next consecutive couple of months. I don't know what other bullish content and material to show you guys that is not hypium or hope. These are coming from industry leading experts that have many more credentials than I myself. And all of these video breakdowns as a collective whole are from within the last 6 months. Some of them only posted a few days ago and have hardly any views. People are simply just not paying attention to this stuff because people are controlled by emotional trading and investing instead of zooming out and looking at this space as a collective whole long term. So with that in mind, okay, I just want to show you guys the current market environment which we operate in. We warned you all about this, and this is not to say or toot our own horn. This is to show you guys that here at CYPRX, we provide educational material, full fundamental breakdowns, and technical analytics that actually come into fruition because we understand what creates a risk-on, risk-off market environment. And I'm going to play a perspective from a large industry-leading expert, a bank in this space from Signum, from the Signum head of investment research, where she confirms exactly what we've been trying to tell you guys, that crypto is still sensitive to risk on, risk off market appetite. And if you go back to our X on December 17th, the day before the market crashed, we had mentioned to you guys the rest of this week will set the tone for the remainder of 2024 heading into 2025. Do not be blinded by greed. Know when the sentiment shifts by knowing what to look for. We said pause on rate cuts from the Fed. Okay. Hawkish Fed comments, rising UK inflation, Bank of Japan rate hikes, or any hawkish comments from the Bank of Japan that lead to yen strength, geopolitical escalations in the Middle East, Russia, Ukraine, Trump tariffs leading to increased inflation fears, so on and so forth. These are a few risks that remain, just to name a few. Understand the markets in which you trade and invest in. Riding the waves becomes relatively easy. All that is really left for you to do is manage risk and avoid over leveraging yourself. And if we go and we look at the charts as to when we posted this for you guys, you can see this was directly at a high December 17th before the market started to pull back. The day after, we had hawkish comments from Jerome Powell. And now, zooming out, looking at the screenshot that we sent you guys, understand these market cycles. So what created the market hype and hopium as we ended 2024, rolling into 2025, right? We had easing fears of recessions. We had Trump trade optimism. We had markets pricing in 4 rate cuts from the Fed in 2025. We had more yen weakness supporting the carry trade. Okay. Then as we rolled into 2025, we had hawkish Fed comments. We had a pushback on Fed rate cuts. We had Trump policies creating market uncertainty. We had higher Japanese inflation and strong Japanese economic data supporting the Japanese yen and prompting the market to start pricing in a higher probability that the Bank of Japan is going to hike rates. All of these things made safe haven assets more appealing. Okay. And that created a risk off market mood. Don't just take that from me, an individual that's here trying to educate you from a retail perspective accurately with updates before they play out. Take that from a large financial institution in this space. Listen to what this lady has to say.
For sure. And as far as the financial markets in general are concerned, I think Trump's cocktail of economic policies is controversial. And they definitely carry inflationary risks for sure. And even, if the growth numbers are not maintained, then stagflationary risks, right? So the markets, I think, are still assessing the likely net result of this combination of tariffs and maybe tax cuts and cost savings and so on, various policies. And on top of that, this is further complicated by certain other factors, like more recently, the accelerating Japanese inflation, and with that, the expectation of Japanese rate hikes, which of course often traditionally has and is expected to have knock-on effects on risk assets. So
come on, people, smash that thumbs up button and subscribe. This video was streamed 3 days ago, has 123 views, and this is coming from a large financial institution. She literally just said the same exact things that are weighing on risk assets now. If you go back to this post from December 17th, we told you guys Trump tariffs, right? Bank of Japan rate hikes or any hawkish comments from the Bank of Japan would lead to yen strength. All of these factors would weigh on risk assets. This is why you should follow CYPRX, because we do not deliver hopium or hype here. We deliver you guys real institutional insights. Okay. We're not here projecting Fibonacci extensions or magic moon cycles on our charts or none of that stuff. It's straight just facts. It is what the banks and financial institutions pay attention to. To finish off this thread, okay, I love putting out information like this to you guys because hopefully, as real individuals in this space that actually want to make money, you guys are paying attention to what we've been saying to you guys, okay? Hopefully you all are tapped in. If you are, then I really do appreciate you guys for tapping in with us, because I cannot stress enough that right now this space is so just shrouded with misinformation and just misleading videos, and it's so crazy how saturated this space is. And here at CYPRX, we are a shining light for anybody that is actually paying attention. So to finish this off, all right, we said the reality is crypto is still highly correlated to risk-sensitive assets right now. That risk sensitivity is lingering while safe haven assets are still in high demand. But here's the key. Once market uncertainty subsides and regulations become clear, institutional money will flood in. Those calling crypto a scam today simply because they do not understand these pullbacks and why they happen will be left wishing they had bought in at these discounted levels. Now is the time to lock in, not to be fearful. I will end today's video clip with 3 more video breakdowns supporting what it is that I'm saying here, that once regulations are clear, these financial institutions have openly said on stage that money will flood in at an unprecedented pace. As always, many blessings to you guys. Be cognizant, be aware, smash that thumbs up button and subscribe if you guys enjoy these video breakdowns, and listen to these last 3 video breakdowns of, again, industry leading experts in this space saying that once regs are clear, institutions are going to flood into this space and bring massive amounts of liquidity and capital into digital assets.
We can expect more news flow, and also at this moment, hopes are high for regulatory clarity. That's very positive for crypto. Also, that in a best case scenario, regulation will be highly appropriate for the asset class, that it would be tailored such that actually it would allow projects to create token structures that pass real economic value to token holders. So the hopes are there. The delivery seems to be fully on track, but it's not yet fact. So when these hopes are realized, I think, first of all, there is more upside. When these hopes are realized, I think, first of all, there is more upside.
Yeah, so I'll try to answer that one, and coming back to the last one. So I think from an institutional perspective, right, the success of staking, liquid staking, restaking is going to be very dependent on regulations, right? And so we have discussions with regulators all around the world, from Japan, Hong Kong, Singapore, to Switzerland, Germany, France, the US. And the big hurdle is still education, right? Sometimes regulators don't even know, or don't even try to know, the difference between lending and borrowing, and staking, liquid staking, restaking. So in my opinion, we're still far away from TradFi and regulators fully embracing this. So I think we're not even like seeing the first big wave, and there's a way bigger tsunami coming, let's say, when the real institutions and the regulators start to understand and hopefully unblock many of the restrictions.
If this goes through, the amount of, because the rule, the amount of reserves a bank or a financial institution is required to have for the volatility of this asset is incredible, prohibitive from them doing anything.
Yep.
So if this goes through, the amount of tokenization and the assets that can be put on chain is just going to explode.
Now, is it worth anything? Yes, right? This part of the conversation is called the Great Liquidity Reservoir, and I am going to struggle to convey just how much capital there is behind this regulatory dam, because the numbers are just monumental, right? How much money is there? Well, let's start with the most liquid of the liquid, right? Bank deposits, stocks, and bonds. $400 trillion. Right? Certainly more than my current retirement nest egg, and plenty of money to buy you a nice place in central London or San Francisco, right? 400 trillion. There's another 379 trillion in real estate, right? Gold is 13 trillion by itself. And then you get to the entire crypto ecosystem is like 2.5 trillion, right? I'm not going to say all of this money is going into crypto, but quite a lot of it will end up in crypto, and a huge amount of it is going to end up in tokenized digital assets.